Everyone's eyes are on Palantir. After a huge spike in Palantir's price, something crazy happened. A board member showed Palantir's future plans. This is related to their NASDAQ listing, but everyone got mad at what he leaked, to the point that he needed to delete his whole X account because of the exposure. Today's updates are truly insane, and you don't want to miss this. What actually happened? Well, let me explain. Disclaimer. After the recent news of Palantir being added to the NASDAQ, their stock price soared dramatically. Their stock just hammered on and broke several ceilings that they weren't supposed to break. They're becoming unstoppable now. But why is this happening? The jump seems to be driven by the hype and anticipation that joining the NASDAQ will bring more exposure and credibility to the company, making it even more valuable in the eyes of investors. This move also signals that Palantir is maturing as a company, which likely attracted more institutional interest. Some investors are also betting that being on the NASDAQ could open doors to better partnerships and a stronger position in the tech and AI sectors, further boosting its appeal. The excitement spilled over to social media, where some people taunted skeptics who were still waiting for a price drop. One post stood out saying, "Are you guys waiting for the pullback?" alongside a screenshot showing Palantir's stock closing with an impressive 11% gain in the last session. This massive surge not only silenced some of the doubters, but also highlighted the growing confidence in the stock. Gains like this don't happen every day, and served as a reminder of Palantir's potential to surprise, even when some are predicting a fall. However, today's insane updates don't just end there. A Palantir board member is now getting heat from what he did. This stirred the whole tech sphere and the investing community with what he said. This is getting out of hand. Listen to this. In a tweet on X, Palantir board member Alex Moore stated that the move to NASDAQ would drive billions in ETF buying and benefit retail investors, emphasizing that the company's actions are aimed at rewarding and supporting its dedicated retail following. He also acknowledged the criticism Palantir has faced over the years, remarking that the company has dealt with negativity for decades. While many retail investors celebrated the bold statement, it sparked anger in some corners of the tech world. Critics felt the tone was too casual for a company of Palantir's stature, and questioned whether it was appropriate to focus on retail investors in such a way. The comment added fuel to ongoing debates about Palantir's approach to engaging with its audience, particularly as it continues to blur the lines between traditional corporate behavior and a retail-driven culture. Why would this anger some people? Well, the tweet from Alex Moore was seen by many as a potential attempt to manipulate the market, which is strictly illegal. One person pointed out that it seemed unusual for a board member of Palantir to signal an intention to trigger a short squeeze. He was questioning whether this could be considered market manipulation, especially given his position on the board of a public company. Let's jog your memory a bit and talk about what a short squeeze is. A short squeeze happens when a stock's price rises sharply, forcing investors who bet against it, or short sellers, to buy shares to limit their losses. This rush to buy can push the price even higher, basically making short sellers lose money in an unfair way. Whether this is what happened with Palantir or not, we'll have to leave it to the authorities. But for now, some interpreted Moore's comments as a signal to trigger this kind of reaction, particularly by emphasizing retail investor gains and mentioning billions in ETF buying. If seen as a deliberate attempt to influence the market, the tweet could raise serious questions about the company's approach and compliance with legal standards. And here's what's even more interesting. The outrage surrounding Alex Moore's tweet grew so intense that he deleted his Twitter account just 1 hour after posting it. The swift removal of the tweet raised concerns about the potential legal and reputational implications for both Moore and Palantir. It could suggest that the company recognized the seriousness of the backlash and the potential violation of market manipulation laws. Deleting the account might also signal that Palantir wanted to distance itself from any appearance of improper behavior, especially given the scrutiny from both the public and regulatory bodies. The incident highlights the risks companies face when board members publicly express controversial views, especially in a highly regulated market like the stock exchange. The timing of Alex Moore's tweet couldn't have come at a worse moment. This was paired with an action for Palantir's CEO that made things a bit more suspicious. You're going to want to listen to this. Just as the tweet sparked outrage, Palantir's CEO, Alex Karp, sold another 4.5 million shares of the company, totaling around $266 million based on Palantir's recent price. This move raised eyebrows and could look bad to the market, When a CEO sells such a large amount of stock, it often sends a signal that they may not be confident in the company's future performance, or that they want to cash out before a potential downturn. Combined with the controversial tweet, it creates an image of instability that could shake investor confidence in the company. All of these have sparked heated conversations online. But, on the brighter side of things, there are also those who think that the price climb is just purely because of Palantir's performance. They're saying that whether the tweet was posted or not, the price of Palantir will still climb no matter what. Hear this out. One person tweeted that Palantir was always going to join the Nasdaq 100, regardless of any controversial remarks. They acknowledged that the tweet was a mistake, but defended the stock's rise, insisting that it wasn't about a short squeeze. Instead, they pointed out that Palantir is a company with massive growth potential, calling it a mega cap in the making, with a multi-trillion market cap potential over the next 10+ years. This view defends the company's remarkable growth, suggesting the price surge reflects Palantir's solid fundamentals rather than market manipulation. There's merit to this perspective. Palantir is deeply entrenched in rapidly growing sectors like AI, big data, and defense, all of which have significant future growth potential. As Palantir continues to expand its offerings, particularly in AI and commercial sectors, its value could rise even further. The company's recent performance, combined with its role in high-demand industries, supports the belief that this price climb is not a fluke, but a sign of long-term growth. With the rapid advancements in AI and Palantir's ability to leverage its data analysis tools for a wide range of industries, it's clear why some investors see this rise as justified. Rather than being a speculative spike, the surge could reflect the company's growing position as a dominant player in the tech world. This perspective highlights that Palantir's future is tied to real-world performance and innovation, not just market hype. In fact, as Palantir approaches its listing on the Nasdaq, more and more funds and institutions have been adding to their Palantir shares. This increase in institutional buying shows that the tweet may not have had a significant impact on their decisions. These institutions are likely focused on the company's long-term potential, looking at its performance, growth in AI and data sectors, and its expanding commercial success. It suggests that despite the controversy surrounding the tweet, institutional investors still see Palantir as a strong, valuable company with significant upside. This further supports the idea that the recent price climb is driven by solid fundamentals, not just short-term market moves. Here are some of the big institutions that have been increasing their Palantir holdings recently. Jump Financial raised its stake in Palantir by over 81%, bringing their total to more than 640,000 shares. Similarly, Toronto Dominion Bank, with a $57 billion fund, boosted its Palantir holdings by almost 5 times the size of what they currently have, purchasing an additional almost 900,000 shares, bringing their total to a little over 1 million shares. These large buy-ins are positive signs for Palantir. They show that major institutions are confident in the company's future and believe its stock has significant growth potential. The increased investments from well-established funds suggest that Palantir is viewed as a strong and stable player in the market. These moves also indicate that institutions are positioning themselves to benefit from Palantir's future success, especially as the company continues to expand its reach in AI, data analytics, and other growing sectors. This institutional support further reinforces the idea that Palantir's rise is not just driven by hype, but by solid performance and long-term potential. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.